Good morning. This is December 22nd, Sunday. Glad to have you in here. I'm going to quickly start by an overview of the S&P, and then I will have a separate video tonight or tomorrow just for this week as far as what to expect. The easy statement is that we had by far the worst single session of the year. We had a similar size drop that happened on 8.5, but it mostly happened before the market opened the way I remembered it. So what I did is I printed and copied and pasted over how the price action happened thereafter. This is what happened last time. And of course, they went on to make a higher high and an all-time high. But this already is slightly different. When we dipped on August 5th, that was it. That was the low. And this time we made a lower low. The S&P has not priced out the Trump trade yet. If we start out with Apple. Something weird happened with Apple at the bell. Right as the bell rang, I believe Meta fell apart, like dropped $10, and Apple picked it up. Forget that candle. That's a new study I haven't figured out yet. But that last burst, I think it went up $2. So something happened to Meta. Somebody freaked out, dumped Meta for Apple. And that happened on the last minute. That is what I think happened. So we'll see how that plays out this week. So Apple is still an amazing company. It is the least exciting of all of the Terra caps, but it's still an amazing company. AbbVie, as far as Apple's concerned, it is at an all-time high. And for me, this is never an opportunity to invest for the long term. If you want to trade it, I indeed bought what was it, $200, a put butterfly broken wing, so a small $200 bet, I think it was 200, to see what happens in the next few weeks. I believe I picked it for February, but nothing huge, just for fun. AbbVie, the whole sector has been under fire since the election because of the fear of the new head that's going to bring everybody down, I guess. Mr. Kennedy has it out for anything that's unhealthy, and these guys are feeling the pinch, the whole industry, not them particularly. So from an investment perspective, if somebody knows the business, it probably is an opportunity to start a position. If I'm already long AbbVie, I'm not going to add to my risk without a little bit more clarity as to what's coming down the pipe. Ways of going long, for me, I always favor selling puts to own shares if one wants to buy more than 100 shares. If not, just a small position will do, and I knocked the keyboard by mistake. I would not go all in because we don't know. The markets are still at all-time highs. What if the markets falls? This I'm going to repeat for a bunch of other tickers. It might be good to go long AbbVie, but going long AbbVie at all-time highs adds a little bit of risk. Adobe is definitely in a support zone. You saw me, I shared a trade that is under fire. And we do have definite support. If you look left, we have support. But again, they kind of breached it a little bit lower. That in by itself is not the disaster because how they bounced. Now, they bounced and recovered the neckline. So let's see if they can hold it. I'm not so much afraid of Adobe itself, but itself inside of a market that may or may not be correcting is dangerous. So if it's a big position, I believe you could have exited it for a minor loss. That is definitely a good idea. Like if I took too many, if I closed 20 or 30% of it, in the end, if I didn't need to close it, I wouldn't have lost anything. I would have just reduced my exposure to it. AMD, definitely not my favorite stock. I've expressed that opinion for a while now. I said that it will be in the low 100s and maybe lose the 100 level. A few weeks ago, I think 2 or 3 people expressed, oh, it's fallen so much. I said, yes, but it's falling when the markets in general cannot stop rallying. So here's a critical spot. It needs to go back to 140. Otherwise, it's just going to drift lower. I don't know where it will end up stopping. It looks like it wants to bounce. So 135 to 140 is going to be difficult without a headline. So the CEO needs to come out and say something like NVIDIA. Oh, we figured it out. We're going to double our sales in the next whatever. They need their moment, their AI moment or whatever, quantum physics moment, something like that. Quantum computing, not quantum physics. They need something for the market, the silly market, to adopt and run. As it is, they are suspect to drifting lower. If I'm long, it's too late to exit and it's too early to add. That's my pertinent. So if I bought at 180 or 170 or 160 and I went all in, I wouldn't add here, honestly. But if I bought 20% of what I intended to buy, I could add a little bit here. But I definitely leave room to add more later in order to control my entry price. It is not my favorite company, so let's just see what happens with it. Amazon, definitely I wouldn't, one of my favorite companies of all time. And Amazon up here is, you keep hearing about project this and project that. I don't know if you know that they have a Starlink competitor. Do a deep dive on that. I think the Tesla, not the Tesla, Freudian flip, the Elon Musk Starlink has an advantage on their Starlink satellite solution. Number of satellites, where they're positioned relative to the Earth, what it takes to make them run and all of that. And I think they're still far away from making money with that. So Amazon, one of my favorite companies up here, this is not an obvious point of entry for an investor. NOPE, not an obvious point of entry. It's not a bad, but it's just not an obvious one. If I'm long Amazon, I would be selling calls comfortably against my shares. And if I'm long Amazon stock, I would definitely not add here. This red thing on my screen says that it could be at 214 and 206, maybe even 198 in the next few weeks, months. If the market doesn't make a new high, that's probably the more natural path. Another amazing company, Arista. I worry about this spike from the earnings reaction. So one time Amazon did one of these and I said there is no way they're going to be able to break through it. It's a lot of effort. They came close. Awesome P&L, better than Amazon's, by the way. So this is a definite buy the dip moment. And next time you do get a dip, buy the dip. Up here, it is not, for me, even as awesome as it is. At least closer to 102. You want to be inside this zone to pick a better base. If I'm long Arista, there is no way I'm adding here. Okay. I forget what this is. Arapaho? Produces oil and gas. All right, so this whole segment is not my expertise because especially when it involves gas. Technically speaking, 22 was important to hold 2150 even. So if they don't recover that, they're at risk of drifting lower. And if I wanted to find support, I have to scroll back to 2021. That is not a good situation. So let me zoom out to a weekly. Yeah, okay, so it has fallen enough to where it could bounce hard, and they need it. The support is everywhere. 16, 13, anything below 10. I don't know the business. It's kind of spotty with the earnings, sales are even spotty. Yeah, so you need to do homework. Charts-wise, yes, you can expect support, but it could be here. It could be $5 lower. We don't know. ARM, too good of a P&L, but this is too like if the P&L is that good, like from a margins perspective, why is the stock so elastic? That's what worries me. It could be one of those, we love it, and then they hate it. All right, so let me see if we can forecast some things. So far, they're being predictable and they're being choppy. Like every rally is being sold, and this last rally made a lower low. So I can tell you with confidence that if you lose Friday's low, or last week's low, I think that was Friday, yeah, you open the door for 115 and 114. I want to remind you that we bought shares at 55 when it came to market, and that was not long ago. It is not a bargain at 130. It's a great company. Technically, I want to see if they can recover 140. If not, I think they can drift lower. And if the market's correct, this one, you can buy it closer to 115 or lower. So if I'm long, I'm not adding. If I wanted to get long, I could sell puts to own shares. In fact, I think I just did that, right? I sent out a trade setup with selling a credit put spread. I don't think it's a good idea to sell puts naked in a whole bunch of stocks when the markets have never been higher. I don't care how good the stock is. Speaking of good, this is also a good stock. It had a big drop recently, and people are saying, is it now? Is it now? Is it now a good time to buy the dip? Not for me. It could rally to 730 or 32, but I think it could also come down to 675. So why would I want to buy a call? I wouldn't. I could buy a call spread, especially if you finance it with a credit put spread. If I can go long without a lot of money out of pocket, that's what I would do. Shares are fine, but if I already own them, I'm okay. Broadcom, so this was my biggest win last week. If you were in the live, I shared a trade that we did spontaneously, and it was too big to share out there in writing, but I'm short long term. I think they're going to price out that big pop that they just had, but I'm long short term. So I bought a put and it worked in my favor, and I sold the put against it. So I'm not, what I'm saying is I'm not like very bearish on the company or prospects. I am just bearish that spike that happened out of nowhere. It was too big. You know, I read the headline. It wasn't that great. As great as the pop. Okay, so how badly did you misprice the stock and all of that? So I took a shot on it. This week I'll decide whether I want to keep it or not. It is a buy the dip stock, but I wouldn't touch it unless it comes down below 195 personally, if I was an investor. Some people think that that's stupid because in the long term it doesn't matter. Well, if you believe that, then it's stupid to say that, because if in the long term it doesn't matter a little bit lower, why does it matter if it's a little bit higher? In other words, people don't worry about how low it can go, but they worry about how much they miss out. It doesn't make sense. If you like the company, put it on your watch list until it comes down to a more reasonable level. Just look at it. Does this inspire a good spot? How many charts have you looked at in your life and seeing this as a base for much more upside? It just doesn't make sense, right? Like this one right here. Anybody that bought it up there could have had 40% more shares if they just waited a little bit more. It just doesn't look right. Anyway, those are my opinions and I'm sticking to them. Boeing, it's a no-brainer, not an entry point here. Great rebound. Down here, people in our group were warning about, okay, this one is so bad, it could have to file for bankruptcy. And I'm thinking to myself, okay, that never crossed my mind. But anyway, now it seems like, nope, they don't believe that. They, as in the markets. And now everybody's piling in. And if you look left, that's not the place where you pile in. It's still a crappy company run-wise. The only reason it's a valuable stock, it's because it's one of two options. You either buy from AMD or from Intel. So, and they're both at capacity, basically. They can only deliver so many planes, it and its competitor. So it's back to the zone where we thought, that little circle in the middle, which is 174. Around 174, somebody asked me, and I drew these purple zones, and I said, there's a big move coming, up or down, I don't know. And then boom, within a day, this happened. Well, they just recovered it on one of the worst weeks. So that's a power move. And then what? Not an obvious entry point. If I was buried long and I didn't do anything on this, like if I bought shares here and now I've got my money back and I stayed long, that means I am truly in it for the long term, and that's fine. But if I'm starting longs, I'm starting at a place where it should be resistance. I should know that. I don't touch BABA. I shorted the Chinese stocks the last time they spiked and made money. I shared it. And if somebody did not take advantage of that, now they're losing money more than they were before. I have a personal friend who reached out during the live room one time, and I interrupted the live and I took his phone call. And because I knew exactly what he had done, and he was seriously distraught. And I'm curious to know if he exited on the pop. I don't want to call him back because I don't want to find out and be upset with him. So anyway, I think this one can go to 76 if they don't pay attention, if not lower. It is a base of support that extends through 74. How about that? So it could stop here. It could go down to 75 or 6 or 4. I am short banks. Nope, not anymore. So yes, I am through the XLF, a remnant piece. So I shorted Berkshire, and you know about it. I wrote it up. I shorted JP, and you know about it. I wrote it up. I exited everything. JP Morgan went from super profitable to red to profitable. So I exited on just profitable. Okay. Berkshire was super profitable. And I still hold a few XLFs puts for February, I believe. Nothing scientific. I don't think, actually, I know that I've never seen banks gap up 10%, all of them at one time, not even including any earnings season they've ever had. They've had strong earnings seasons and more weak earnings seasons, but they've never had one day where they all popped 10 to 15 to 16% and not give it back. That was the Trump rally on banks. For some reason, they think that this time around, there's going to be more deregulation. The way I think about it is the first term that he served, he deregulated whatever he can. So what other regulations specifically are you guys talking about? I would love to hear it. Every time I ask that, I get nothing in return. Meanwhile, this chart is going back to base, covering that gap from the election. Not an obvious entry point, because in my there is a chance, like when stocks do that, if they don't come up high enough, they retest, because all of this now is resistance. That's my take. So it's easier to come down to 41 than it is to come up to 47. Just picture that. It's easier to come down to where my cursor is than it is to breach the letter R. Until then, they are buying dips and making higher highs. So you be the judge. I would not buy a call. I could sell a put to own shares. I could own shares, but at least not more than half of what I want to intentionally own. I don't know who that is. That is an ugly chart. All right, so whatever this is, it's fallen into a place where it's been before, and it's trying to hold it. So if you lose 33.20, which is the bounce from here, you might test 33. Not an ideal chart. So Wall Street hates it. Do your homework. Find out why. This chart is saying, yeah, you're in support, but it was in support up here, and every time they gap down, not they gap down, they level down. So make sure that it's not another one of those. Blackstone, finally. Oh my gosh, I wanted to short it way up there. I just had to. Oh my gosh, look at what we missed out on. Woo-wee. Wow-wee. That is fantastic. Well, that makes more sense. That makes, I said, what? This on the short list, I bet you it's on one of my, how did I forget to short this? Okay, so now it's still a short, but it's not an obvious short. It looks like I had something here. Delete it. So rallies, I don't think they can take out 130. 180, sorry, 178 to 181. 178 to 181. So if you are lucky and they go here, I would exit my longs. And there's another one above it. But this area is not going to be easy to recover. Might drift lower. I would think that just like Bank of America, rallies should be sold. And if they don't hold this low, they will do this. And then test that level of support right here. All right. Caterpillar, fantastic company, unbelievably strong stocks, and it's in the hands of the sellers. How do I know that? They didn't close last week. They breached that fantastic bounce level from the end of October. And they have made lower highs since the election pop. So now I'm looking at anything above 380. Anything above, I'll change the color. I'll make it purple so we can speak to it. Anything above the purple line, difficult. So this week, I think 376 and higher will be difficult. And it'll be just as easy to drift into this yellow box. Decent support zone. This T2 is on something that's not on my screen. Okay. So we shall see a lot of consolidation, but look how wide the zone is. It starts from 368 and it ends at 308. So a big support zone, like big. But what upside is there? So I definitely would not own calls unless I'm actively trading minute to minute. 374 and higher is going to be resistance. CAVA, this stock reminds me of, somebody said that and I agree, Chipotle. The metrics they provide, high, strong restaurant metrics. You don't see those often. In an environment where markets cannot stop rallying and maybe they just started, maybe, that's a big maybe. And this one can be cheaper. So if I am long, most definitely with complete confidence, I'm not adding. If I wanted to get long, I wouldn't take more than 20% of my share. Again, that is my own personal preference. I think that the stock chart is vulnerable down to 1092. It doesn't mean it's falling to 92. It just doesn't have a good base until you hit that level. Look left, the volume profile is very weak. So it is vulnerable from a chart's perspective. So again, this might have sellers hiding in wait right there. So rallies into that red box are going to be met with sellers. CCJ, very violent stock. So it must have a very wonky P&L. Maybe not. It's just a trader. Gameco gives provision uranium. Okay, that's why. So there are a few buzzwords that are starting to rub me the wrong way. One is AI, but now it's tapering off. Then this one, uranium energy, nuclear energy, and more recently, quantum computing. And it's starting to feel like, I don't want to insult people in these businesses, it's starting to feel like the concepts of pot stocks in 2017. Clearly not the same. There's a little bit more validity to these three concepts now, although quantum computing, we are at the pot stock level. This is a personal opinion. Everything that has, it's a power company that makes $2 now, it's going to make $1 zillion because of uranium. All right, it's not, I doubt it's going to be like that. Although I am not an expert, chart-wise, this rally into 57, 58 is going to be met with sellers. So let's see how they deal with it. There's a, I guess I can put it here, some sort of a resistance box here and one above it. Let's see if we can do it on the fly for you. Whoops. Yeah. So if we come up to 60 or higher, that would be surprising, and it would be met with a lot of sellers potentially. So a lot of resistance, and the support, one candle, which is strong. So 47-ish is your strong candle. You don't want to lose it. Not that it's going to matter much, but the machines will want to expect it to hold. And if it doesn't, then the second level of support would be 42. So I guess this is one of the ones where you can sell puts to own shares. If you truly believe in the concept, that totally makes sense. Confluent. Wow, that is so... look at this. What in the world? I mean, the P&L is pretty stable looking. And look at it, zigzagging. So for me, when the stock starts doing that, I don't trade it anymore. You invest in it if you want to, but you need a stomach of steel, because you do homework, you make a thesis on good business, P&L, and then the stock goes to zero, goes to high heaven. My God, I mean, this is a double cut in half. I don't have that stomach. I don't enjoy it, even though I can make money with it. I just don't enjoy it. Well, speaking of which, if you take out 34, you go to 42. Otherwise, you should be drifting towards 23, 22. I'll repeat, if you take out 34, you go to 42. Otherwise, you could drift to fill the hole in 23, 22. Chipotle, I will not give it a pass anymore. The 64 is a problem. So there is a chance if they lose this level, they might come down to 57 or 56. Okay, at least. So that would be the risk. Until then, anything above 64 should be very, very difficult. I'll put resistance box up there. It's a little bit wider than that, but I'll leave it there. So rallies into 64, if I was stuck in calls or credit put spreads or sold put, and I regretted it, I would use that rally in order to get out. Coin, I wouldn't touch it with my enemy's money. I said that from the top, and I stand by it. Nevertheless, this was a tremendous breakout, and these 3 dots become an area of support if you're just moving over to here. Unfortunately, it's wide. It's all the way down to 220. So that's $60 of downside risk. Bulls need to recover this zone for control, and they did. So now we'll relabel that one. We'll say base. So for me, if I'm selling puts to own shares or selling a put spread, I would want to be in there. I would never invest in the stock of coin just for a very simple reason. Its future is completely tied or heavily tied to the price of the most elastic asset on the planet, Bitcoin. If Bitcoin gets cut in half, this stock will follow it. I don't care what the stock market is doing. Okay, so it's an extra variable that I cannot control. I'm invested in Bitcoin, you know that, crypto. I would rather trade crypto for that opportunity, not coin, just so you know. Anybody that bought it at 340, please explain to me what was the thesis. Look at the P&L. Unless they accumulate coins on their balance sheet, I don't understand the enthusiasm over its stock price. Somebody needs to teach me that. So those are my personal opinions. Chart-wise, there's a good base around 220. Costco, amazing company, not an amazing spot to start longs. I like the fact that they are, the bloom is off the rose, so to speak, for now. It's better for the investor for the long term because then it builds a better base for more upside. Amazing company, but I think the consumer is in the US is in danger of being tapped out. And this one will suffer firsthand. And not so much the P&L, the conversation. Wall Street is very fickle. They love, and then they spit it all out for no reason and for wrong reasons. So you might be correct on everything with Costco, and they might cut it in half just because they think they're right. So I'll say it differently. I believe this was an earnings reaction or an earnings forecast box for this trade here from the earnings, which I will delete. So I'll tell you anything above 975 is going to be met with sellers. So this is not a fair value gap. It's just a resistance box. And if that's the case, then it is going to have to lean on support. So you see how this is not an obvious entry point. If I wanted to go along the stock, I'll make sure to sell something in order to buy something. I wouldn't just buy calls. It says it's too expensive. Let's see if that's still the case. Statistically speaking, price to sales is $1.60, which is definitely on the expense. That's probably the highest. And the PE is in almost in the high 50s. That is also the highest. So, and this stock grows single digits, not double digits, which is very impressive for a retailer. So price to sales and PE might be appropriate. Any which way you slice it, it's not cheap. I can say that with complete confidence. So with the markets being at all-time highs, I bet you there's a good possibility that this one will be closer to 900 in the next 6 months, at least give you an opportunity there for reasons unknown. We'll see. CrowdStrike. Okay. I just want to say something here. How ridiculously manipulated this market is. The rhetoric, the conversation. Here they commit, and I'm using Microsoft's words, paraphrased, the biggest technological outage in history. Okay, we're talking. I grew up through the 2000 scare, the Y2K scare, And this one provides the largest breakdown in history technologically. And then not only it recovers it, then it goes to almost make an all-time high. I just don't get it. Okay, so and the P&L is okay. You know, it's not awesome. There's no bottom line, and the growth. Let me see how fast it grows. Double digits. Yes, so the growth is there, and it's a hot stock for sure. But you spit it out, you cut it in half, and then you recover and try to break new highs. I can confidently say it's not an obvious point of entry, although technically, if they make a new high, they go to 430. So are you an investor? Are you a trader? If you're a trader, I get it. If you're an investor, I don't. We'll see. My arrow kind of played out, except for the poke was a little bit higher. So we'll see if this was a blow-off pop. Let's see. Resistance zone, that's still there. Okay, but now you can extend it through 380. Obvious point of entry, no. Good company, yes. CVX, I warned and I warned and I warned and I warned and I warned again about oil companies and buying them because of the dividends. It is the dumbest thing on the planet for somebody to do that from a math perspective. Great companies. I loved them during the pandemic because they fell into a hole that I knew that the management have been proven itself so well that it's a no-brainer purchase. But when it hits all-time highs and the market's at all-time highs, the 3.5% dividend they pay is not attractive enough. It doesn't protect well enough. This one has a base. That buyer zone, that red rectangle is still there. But if you look left, if they lose that, they would lose $20 like this and go into a different zone around 120 or lower. So if I own these stocks for dividends, and I've owned them for a while, there's nothing to do. They're doing their job. They're good assets to hold, and they're paying you consistently enough throughout owning the shares. Call buyers here. I mean, you could make money. It is a short-term support zone, and they may bounce. So if you're a trader on that, I get it. But you should also know that 150 plus is going to be very difficult. So I'll put a box for a resistance from the charts, okay? Not valuation or anything. Amazing companies. Proven themselves. The management is focused on returning money to the shareholders through dividends. They always protect the dividend. So this is still a buyer zone. But it's a zone, and it extends through the 120s. If you look left, once you lose that one, then you have to look left pretty far, and that's just not very reliable. So I would use rallies to lock in fast profits if I was a trader, and if I'm an investor, I just hold stock. There's nothing to do here. Datadog. Oh, on that Chevron, there's also some rumblings with Oxy. Please don't fall for it again, with Buffett and all of that. All right, so Datadog lost the neckline around 152, and they didn't hit quite the target yet. The target can be lower because of the high pop, $17. So this can extend through 136. In order to price out this head and shoulders, and they should be lower. So we'll see if they can come down lower. So the lines are still available. Support, 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 resistance, resistance. I haven't changed my opinion. I bet you could get an entry point around 136. DELL, I don't touch it. I don't touch it. I've said that many times because they keep coming out with headlines. The P&L, it is not attractive on paper. Not attractive at all. Let me see. I think I looked at it. There's hardly any growth. Yeah, very sporadic growth. So it shrinks, 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 and then grows a little bit. Reminds me of Micron, very inconsistent. And it's not a bargain. So I don't know why people love it. And look how elastic the stock chart. It trades like Tesla. It's weird. So I keep finding myself surprised. So if I'm surprised, I can't forecast. I can't plan a price path that I can profit from. So I just don't trade it. And it busted through one level of support, and it's trying to hold the second. If it doesn't break through 126 and it wants to do something, it might go to 98. I have no idea why it should go to 136. Maybe Mr. Dell takes it private again and says, oh, I'm looking to sell it or something. I don't know. I'm speculating. It seems like they spin off this and sell off that and buy this and merge with that and take it private and reissue it public. It's not for me. Has support, has resistance. DHI. All right. So fell into an area that has been in contention for a long, long time. Summer of 2023 failed. It took them months to try to break out, finally break out, and now they're back into the same level of support. Now, if they don't hold 132, ask yourself, are they planning on going to 104? Because that would be the target. So I will modify this and I say target 1, support. And if you want another one, target 2, support. So those are not forecasts. I'm saying it has support and it's been proven over time. But it's been a while. So, and they already poked below it, I think. No, not quite. So this week, if the market is red, maybe they lose it or on a bounce. So you want to make sure when they bounce, everything above here is resistance. You don't want them to draw this and come back down to here. Is in danger. Oh, snap. What the fudge? And this was a good company. I know it because a lot of people love to invest in it. Whoa, mama. That's what happens when a stock rallies, not consistent with its forecast. I bet you anything, this may have been caught up in the nuclear energy thing. There's no need for a stock that stable in its P&L to do this, to rally 1,000% in 2 years. There's no need. So anyway, whenever I drew this, it kind of said it pops and drops, but it didn't pop, it just dropped. All right, so it's entering a zone of support through 24. That's the good news. You get into strong support. The bad news, it's pretty wide, 24. There's nothing it can lean on. It's too old. 28, 26, 24, 22, 20, every one of those is a support zone. If you want the best area of support, is 26 through 20. E.g. Everest. I don't know what Everest does. I can't remember. Engages in the provision of reinsurance. Reinsurance. All right, so same comments. You want to hold that red line. If you don't, you're going to step down a few bucks. So they have vigorously defended that zone. It's not so much a line, it's a zone. But what also is consistent is the sellers above. So heavy resistance, I will extend it and lower it. So ping pong inside the zone until breach one of the sides, and it looks like it's easier to do this than that. Stable P&L. Stable P&L, unstable stock. What the fudge, man? Okay, so these stocks are crazy. Too elastic. That tells me the investors in them either are manipulative, like on purpose, or just ignorant about where the value is, and they keep exploring, trying to find it. All right, 140, prior fail. 146, prior fail. You take out 140, maybe you get to 154. Looks like I shorted it with a credit call spread and a debit put spread. That played out. So I would do resistance zone, and it's wide. I mean, anything here, and here. And a strong support like this now has become a really strong support. So anything below 116 solid. So the bulls can build a swing back up to better days. What Mexico ETF? Good Lord, not doing well over there. Okay, so technically the stock lost support at 54 and the target should be lower, but is this a wick? That's a wick down all the way down to here? No. The support extends through 44 and it gets more serious, but there's also weakness down to 38. What is this here? Well, maybe not. Anyway, it's falling into a definite support zone. So if the investors are serious about it, they will defend this zone and they have the opportunity to bounce to 54. That would be the shorter term comment. Ford, I believe that's the last ticker on this video. They needed to hold this purple, and they fought for it one more time. You can see if I extend it. And now they lost it. So now it becomes a problem. You see that? Okay, so to come back to 10 and 11, it's going to take a monumental effort. But look left, pretty strong base from August. When? August 6th. The A5 dive. Remember that? Yeah. So I tell you one thing, though. You don't want Ford to come down to 940 because then it probably loses a ton more in percentage term. So if I'm invested in Ford, I'm not adding. If I'm looking to invest in Ford, I will take half the position now and forget about it. If it gets cut in half, I will add the second half and just do nothing. Trade Ford. No, there's not a lot of money to trade in it. The options are pretty weak. So I would rather not. And if I wanted to buy stock in the stock for the long term, normally I would sell puts and buy in the money calls and sell calls against those calls. If you can find premium, that might be something. Like commit to buying the shares at 830 or 850 and then buy in the money leaps and sell some covered calls against those leaps. I don't think that that's the stock, but if you want to do that, pop into the live room and we'll try to formulate something. And with that, we end the video 1.